Hi, it's Natalie from Platinum Property Partners. Wanted to get on to record a video following yesterday's very exciting news about the stamp duty, and I am joined today by a specialist mortgage broker, Kelly Rule, to find out her insights and what her thoughts are around those changes. So, Kelly, if you could introduce yourself for us, that would be great, and also. What do you think the property market is looking like post-lockdown as we're just slowly coming out of a lockdown situation?
Yeah, thanks, Natalie. So, hi everybody. My name is Kelly Rule. I work for Vibe Finance. We are a specialist mortgage brokerage, deal nationwide. Typically, we deal with investors and developers, meaning that buy-to-lets, HMOs, commercial, bridging, and development tend to be our niche areas of expertise. So yeah, lockdown has been quite a challenge for us. I'm not going to lie. It was awful to begin with. We had no idea, did we, what was going to be happening with the economy, how long we were going to be out for. We had children at home trying to homeschool whilst working. And yeah, it was an awful, unprecedented time. But saying that, it probably wasn't as bad as what we originally thought. We finally getting to a stage now where things are getting a bit back more to normal. So we had a lot of lenders that stopped lending altogether, which again initially set such a wind up people, including myself. But now those lenders are coming back to the marketplace, and we're starting to see most mortgage products back on the market, which is great. Typically on a term loan mortgage, maximum loan that you're going to be getting at the moment is 75%. 80% mortgages have tended to have been paused. Hopefully they're going to be coming back anytime soon. But at the moment, 75% is pretty much your max leverage, depending on your rental cover. And also a lot more due diligence is being carried out. Lenders are a lot more cautious at the moment about lending. But fair to say, we have got that element of choice back. So because of that, it seems to be getting a little bit more easy. We're able to place more applications now as well, which is excellent. And some lenders are actually starting to reduce their rates. We had one lender that reduced their rates last week, and then one lender actually put them up again. So I still think they're a little bit in a bit of a period of unknown, but all it will take is one lender to start reducing the rates, and I think the rest of them will follow. So hopefully, fingers crossed, that's only going to be a matter of a couple of weeks, but we'll have to wait and see, I guess.
That's great. So specifically at PPP, we focus on HMOs, and also short-term finance. So how have those two markets been affected specifically?
Yes, that's a really good question, Natalie. Short-term finance specifically is kind of a similar sort of marketplace. We've again got a handful of lenders that are still not lending on bridging and development. We've got the lenders that are lending, their overall loan to value have been coming down around the 70% mark as opposed to 75, again, just ascertaining their risk. They're wanting to do a little bit more due diligence on clients again. So perhaps where before they'd be a bit more lenient on any applicant that hasn't had any experience of doing any refurbishments or conversions before, they now want to know that the contractor they're getting in place, what their experience is like. And they want to see a bit of evidence of that as well. Whereas before that was kind of just a bit of a given rule. If you had no experience, it's a light, medium refurb especially, then you could perhaps get away with that. On the HMO side, we had no HMO mortgages for a period of time. Luckily, they're all starting to come back to fruition again. HMOs that are let to students, that's quite a hot topic of conversation at the moment. We haven't got as many lenders considering student lets because universities are still unknown what's happening with the universities. I don't know, and I don't think we're going to know really until perhaps August, September time as to what's happening with that side of things. But the lenders that are considering those, probably their rates are going to be a little bit more expensive than what landlords are used to be paying. Their loan to values may be down to 70% as opposed to perhaps 75 initially. It's also interesting in that payment holidays are being criticised. So at the beginning of this lockdown, we were told, take a payment holiday, it will not affect your credit. This is a way of the government giving back to making sure that economy doesn't stop. Whereas now lenders are asking questions on application, have you taken a payment holiday? And if they have, that can then affect their decision making, which I think that's a little bit unfair. I don't know if you feel the same.
Yeah, I think if you need the holiday, I think you should have taken the holiday. But I suppose if it's a case of you're not in a situation where you need it, but you've taken it anyway, just for the sake of it, then I think that should be looked at differently.
Yeah.
I think that's not been very clear, in all honesty, from the offset.
No, I agree. And there are certain clients that we've had recently, just this week, that have just received a business bounce back loan, which again, why wouldn't you? It's free money. Why wouldn't you cash in on that just in case you needed it? But even if you're not using that money for a deposit for a new purchase, some lenders are still saying blanket no, we will not accept you if you've taken a business bounce back loan. So there's lots of weird and wonderful things happening out there. One thing is for sure, lenders are wanting to see, for first time landlords specifically, they'll still lend, but they want to see element that you've got some cash reserves in place. So just in case there are any voids, you've got any tenants that are not going to pay in the future, have you got a cash buffer behind you to cover any potential voids? If you have, you should be safe.
Absolutely. Well, that's understandable at the end of the day, certainly in the marketplace that we're in. So at PPP, my phone was ringing up until around 11:45 last night, discussing the stamp duty changes. It swings and roundabouts, and there's windows of opportunity, and we see this as a big window. And the fact that it's taken effect immediately is something that our network can benefit from. And yeah, we see it as positive for buyers, positive for sellers, positive for investors. There'll be more property coming onto the market. I don't know what your thoughts and views are of the stamp duty changes, Kelly.
Yeah, I mean, I have to agree. I think that it is positive, isn't it? I mean, probably more so for properties based in London and the South East, where they are higher value than in comparison to perhaps the North, for example. But yeah, I mean, anything that's going to help you save you a little bit of money and help kickstart the economy, I am absolutely all for it. I mean, it seems like an absolute no-brainer for me. I was really impressed with the budget yesterday. I'm not going to lie. I know that the government have been receiving a little bit of criticism today from it. Maybe the announcement was a little bit ambiguous with regards to second home and investors, but I think ultimately, I think it's a great move to make sure we don't, or hopefully we don't go back into a recession at least.
Well, absolutely. It's going to get things moving again, get people wanting to get out there and help the economy at the end of the day, and help their own individual businesses. So what do you think the economy is going to look like over the next 3 to 6 months, in your opinion?
I think, again, this is down to personal opinion. I get asked this question a lot, and I think everyone's got their own views on what's going to happen. I think it's going to be tough. Don't get me wrong. I mean, I think especially when furlough ceases over in October, I think that's going to be a great pinpoint as to what's actually going to happen. Unfortunately, there are going to be some companies, businesses that are going to go into administration as a result of not getting the furlough that's been keeping them afloat. There's going to be redundancies off the back of that. That means people aren't going to be paying their rent, which means landlords may not be able to afford their mortgages. So all I would say is that there is so much opportunity out there at the moment, especially with the fall in the retail market, with the fact that we've been in lockdown for 3 months and no one's been able to sell. Now there's going to be so many motivated sellers out there wanting to sell residential properties. You're going to be able to get such a great asset at a good price. Why wouldn't you use this opportunity? So with regards to motivated sellers and getting out there and getting a good discount, a lot of the investors that we both deal with, Natalie, are here for long-term capital growth, aren't they? So getting in there now, getting a bargain with also that saving on the stamp duty, to then know that you've got that asset there for the next 3, 5, 10 years, whatever it may be, and you then cashing in on that later on in life. I mean, it seems like that's a great opportunity. I fear there may be another recession, but who knows? As long as people still keep buying, then I think we can keep that economy going and making sure that we're doing our bit to make that doesn't happen.
Absolutely. And our business model is a long-term strategy. It actually, the purchase price of course it's important, but if you're owning the property for the long term, it's the income that we derive from that asset that is absolutely crucial. And right now, you know, I just completed on a house on the 12th of March. It was £315,000. I paid just over £15,000 in stamp duty. I would have saved £6,000. So, you know, that would have paid for the kitchen on my refurb. So you just see that in real terms. You know, a house at 500,000 would save 15,000, which would be, you know, a considerable saving on refurb costs, which is, you know, part of our model. So in your opinion, should we be buying now, or should we be waiting to see what happens? What are your thoughts on anybody that's thinking about potentially investing into bricks and mortar? I know a lot of people that we speak to are wanting to move and to diversify their funds out of different asset classes due to the instability since COVID. So do you think now is a good time? Do you think it's a good window, or what are your thoughts on that?
Again, it's down to personal preference, and there are a lot of people out there that I think are worried about what might happen. But my thought process is, I mean, these sorts of things don't happen every day. They happen like once every 7 years. So I think we should, especially as investors and doing this as a business, we should be looking at this as an opportunity for us to get good class assets in our portfolio, to make sure then that we are capitalizing on those, as we said, going for the longer term. So why wouldn't you do that now? I mean, we're also in a period where permitted development is being looked at as well. I mean, obviously we don't know exactly what that's going to look like at the moment, but what we hear is that you're going to be able to do loft conversions without getting planning permission. You're going to be able to perhaps build 2 stories above into the airspace without planning permission. You're saying about different asset classes as well, Natalie. I mean, it may be that a lot of these distressed retail sites that we're seeing that used to be hustle and bustle of high streets, we may be able to start changing those into residential flats without having to apply for planning permission. So all of these opportunities are at our fingertips at the moment that weren't there before. And yes, you're right, we could hit a recession. That could happen now. I mean, that could happen next year, who knows? But then how long do you wait? If you're waiting to see what happens, are you waiting until October? Are you waiting till January? Are you waiting till the next financial year? And how many opportunities could you lose in that time whilst you're waiting out, whilst the investor next door to you in the networking meeting has actually gone out and bought 4 properties and has made X amount of profit? So hindsight's a wonderful thing. You could always kick yourself, but I'm a strong believer that why don't you take the opportunity whilst it's presented to you, and again, see what happens.
Absolutely. Well, I think you're going to be very, very busy over the next few months, certainly. I think it's going to be a hive of activity. Thanks ever so much for your time today. I really do appreciate that. And I'll speak to you soon, Kelly. So thanks ever so much for listening, and I hope this insight is for anyone that's listening to us today. Thank you.